The price of oil and energy across the world are skyrocketing to the upside. And this is creating an emergency environment for global equities and for Bitcoin as well, which we will cover in today's video. Why is oil surging? How come if you have bought oil 10 days ago, you outperformed Ethereum hodlers of 8 years? How is this possible? We will explore it. We will go into the why. We will go into ripple effects on inflation and much more on today's update. So make sure you're watching until the end. If you do end up enjoying this video and learn something from by the end of it, then please destroy the like button and subscribe to become a crypto kid for daily updates on Bitcoin, cryptocurrency, and global markets. With that said, let's jump into the oil surge. Yes, you heard me correctly. If you had purchased oil 10 days ago, 10 days ago, you would have outperformed everyone hodling Ethereum for 8 years. That's insane. The current US gas prices surged to $3.45 per gallon. WTI, Texan oil, hits $112 this morning. Brent, British oil, went to 113, 114. This was all discussed in our prior videos on the Crypto Kid channel throughout last week and also during our live streams on the Moon Show as well. We stated that if the trend line acting as resistance from the beginning of the Russia-Ukraine war in 2022 February, if that line is broken to the upside, particularly the $75 zone, which was the neckline of the W formation, we can see a $100 crude oil. That is exactly what we got. So congrats if you were able to get some sort of exposure into crude oil. If you were not able to do so and you're a crypto person, you're in luck because right now cryptocurrency exchanges like Bybit have introduced traditional financial products to their platform at a wide variety. If you want to take advantage of the volatility in other markets like the energy markets, whilst Bitcoin isn't doing much, you can check out Bybit using the link down in the description below to get a deposit bonus and support the Crypto Kid channel to leverage volatility in oil. You can also trade spot pairs of hundreds of cryptocurrencies, leverage trade Bitcoin and other cryptocurrencies too, and you can even get a Bybit card, which will allow you to spend your profits. It's a super, super, super tool that I use personally. So check it out. Link is down below in the description. What do I think will happen to oil? I don't see oil staying at these prices for too long. The thing is, crude oil is in everything. It is in the food that you eat, it is in the clothes that you wear, it is in the planes that take you from one place to another in the world, and there is costs associated to all of those things. If costs go up dramatically, let's say for airfare or for aviation, the flight tickets will go up as well. And fine, that can be absorbed by the company for a temporary basis, but eventually that leads to inflation, that leads to ticket prices going up. That leads to clothing prices going up. That leads to food prices going up. As the price of oil increases, wages do not increase simultaneously, which creates a big problem for the public. And this is why G7 countries are going to attempt to manipulate the price of crude oil by releasing 400 million barrels of their own ownings into the market. So they're trying to introduce more supply to meet the demand so that prices can reach an equilibrium again. What is the equilibrium? I think it's around 70. When we check out the futures contracts for oil, the short-term contracts, yes, they're very high. They're in the $100 prices. But when we look into the next couple of months, into the next couple of years, even into 2033, the equilibrium price is considered to be around upper 60s to the low 70s. So I think this correction, it can even start, I mean, this week. It's a huge shooting star candle. Let's see how the week closes in 4 days and 12 hours time. Depending on that closure, we can assess if that was the top or not. Sure, up elevated prices can continue for a little more time due to the blockage in the Strait of Hormuz. It's not fully blocked, but the traffic over the past few days has been reduced significantly. You can see this is a real map image of the Strait of Hormuz that transports approximately 20% of global petroleum. Outbound and inbound traffic are down about 90%. So 20% of the world's petroleum, of the world's most high quality petroleum, cannot be accessed. So there's less supply more demand. In times of conflict, demand for oil increases naturally anyways to power jets, to power tanks, to power whatever. So increase in demand, lower supply causes prices to surge. That's the real reason for why prices are going to higher levels. Very important, oil refineries and depots in countries like Iran has also been targeted in attacks, leading to, again, supply being reduced dramatically. Iran's oil accounts for 4 to 4.5% of global output. Oil production in Iraq has declined by 3 million barrels per day. That's 4.3 million 2 weeks ago to now 1.3 million. Other Gulf countries have done the same. Supply is not meeting the demand. The macro implications, the macroeconomic implications affect inflation. I told you in the start of the video, even your clothing and even the food that you consume include petroleum derivatives. So CPI, inflation, will go up as a result of higher energy costs. I don't see us surging to dramatic levels. I don't see the next CPI reading, which will be released on Wednesday, to be impacted by high energy costs, because this will be the February CPI reading. But the CPI next month could take us to maybe the 2.6%, maybe the 2.7%, basically allow a drift away from the 2% goal that we were getting closer to. The FOMC will take place in 9 days' time. I think Fed Chair Powell's commentary on the war and higher energy prices will be very important to calculate what they want to do with interest rates. When we look at the table of probabilities for what the rates are going to be, it should state that with a very high chance, we can't see it right now, but with a very high chance, I think they will keep rates exactly the same, and I think they will do it for some time. Lower or higher rates, more restrictive policy, unfortunately states that markets may not continue their current rallies. The Asian markets are taking a big hit. This is the South Korean stock market. This is the Japanese stock market. Huge bearish divergence on the Nikkei, by the way. I think that's a sell from my point of view. They're falling as the interest rates probabilities with the current situation suggest a direction of more restrictive policy. They're deciding to have a sell-off. Liquidity impacts Asian markets, I would say, the most when we look at all global markets across the world. Also, Asian countries import energy. They're one of the biggest importers of energy. Energy prices going up is going to lead to them paying more money for for the energy products that they consume. That's not good for the economy, and it's being reflected on their local stock markets. AI-driven growth is reducing. AI consumes a bunch of power, and if they can't have access to that power, innovation in AI will reduce too. So all of that is hurting not only the Asian markets, but the S&P 500, which will open later on in the evening. I think we will get the big shock on the S&P. When I say big, I think like around 1.5% to 2%. That should be seen on prices. I think we're getting a rounding top. I think the correlation between the S&P and Bitcoin is clear. Bitcoin saw the initial drop, and I think the S&P is going to follow. And I think this will happen over the course of the next few months. In 2022, Bitcoin dropped, or 2021 was the top. Then you dropped into 2022. Then the S&P followed. The same typical situation can repeat given how close we're following the 4-year cycles for the S&P in this midterm year. So bearish on the S&P. Retail purchasing of equities is at the highest levels since the 2021 peaks. Retail historically always buys in the most at the top and they sell during the bottom. In the 2023 bear market, they sold their equities, whereas in the 2021 bull market, they bought their equities. I trade against the herd, and the herd states that this could be a top. Apart from global markets, the US debt is going to see ripple effects of the current ongoing war. According to Radar on Twitter, they say that the US has spent about $6.5 billion on the current attacks within just 1 week. I would beg to differ. I think they probably spent way more. I think transporting all these vessels from one continent to another alone would have costed tens of billions of dollars. And it's going to add to the national debt. It's going to add to the national debt. The national debt is almost at 38.9 trillion. The last time I checked, it was at 38.6 trillion. This is going to build up. It's going to reduce the value of the dollar dramatically at some point in the future. And for Bitcoin, it's going to be good, but that's when I speak of the next 4 years. In the short term, I see still more reason for concern than to be optimistic. I'll upload a second video tonight breaking down my exact view for what I think is going to happen to Bitcoin in full detail. I still believe that this is a fair value to be purchasing Bitcoin. Can Bitcoin come down lower? Of course it can. And if it does, I'll be buying more, but I wouldn't be waiting on the sidelines, purely from my perspective, to jump into some Bitcoin spot buys today. I wouldn't wait to be doing that. I would start my DCA from $68,000. 72 is still going to be the level that I want Bitcoin to see, with 2 daily consecutive green candles over 72. If we can, 84 would still be the target. If we cannot, then 62, and then eventually into the mid 50s is what I'm expecting. Stay tuned for tonight's video where we'll cover Bitcoin and Bitcoin only. Thank you so much for watching. CryptoKids, stay safe, destroy the likes, and subscribe. I'll see you on the next update very soon. Take care, and as always, bye-bye.